Hi, and a very good morning to all of you. And thanks to Business World for giving us this opportunity. I think while the previous esteemed panel talked a lot about how Web3 is going to alter the experience and the learning and engagement part from a consumer point of view, talking all about the 3D change which is happening. Today, we are going to talk about one more big change which blockchain is slowly but surely making. And that is something which also will have a very, very strong financial implication other than just the experience implication. And that is all about tokenization of real assets. To kind of demystify tokenization, it's basically a token is nothing but a blockchain data piece which kind of confirms ownership of a real asset, right? So that is all what token is. But then when I say that is all what a token is, the kind of benefits that tokenization bring to the whole world of assets and asset transaction is really, really significant, right? Not only it brings a very easy liquidity, instant settlement, it opens up these assets for participation by a very large pool of HNI investors, which normally are not able to access these multiple asset classes, and these asset classes are limited to only a very select group of investors, right? So I think these are the kind of big changes that tokenization is bringing in the alternative asset investment class. And I think that is the reason why you pick up any consultant report, right, from your Citibank to BCG, which is saying that by 2030, the tokenization of real assets would be anywhere between $5 to $15 trillion market. And that's the impact that tokenization is going to make. It is saying that over next 10 years, this market will grow almost 200x times, right? So let's understand tokenization from multiple aspects. So I think before I start to understand the perspective of tokenization from my esteemed panels here, I'll just quickly request them to give a sweet introduction, and then we can proceed from there. So starting with myself, I'm Satish Kataria. I'm founder of Fandora, and we are creating a platform to tokenize content IP. Again, the idea behind any tokenization platform is to unlock the potential in that typical asset class and enabling more people to join in that asset class and be more participative. So with that, I pass on to Surya.
Hi, myself Surya. We've been building a product called Ryzer. Ryzer is an asset tokenization platform on real estate from India. Right now we're a 16-member team, and with a core banking and underwriting experience, we thought that, I think a lot of change really required on a real estate segment, which India has been facing that issue on trust and transparency. We believe in it, and yeah, thank you.
Thanks. Good morning, everybody. My name is Ish Anand, and I have two interests in this blockchain and tokenization space. We are an organization called the Global Wealth Group, which is present in probably 5 continents. We do work on the real estate and alternative asset side. What we've done is, over the last 9 years, we've prepared technology, legal compliance, and built a customer base which is currently present in about 68 countries. So we have investments coming in across the world in real estate and alternative assets. And there's a lot that goes on behind the scenes. The second interest is in a company called iCapital Ventures, which is a French organization, a fintech organization, where we are focusing on generating funds for startups, SMEs, and MSMEs across the world. And we have a presence in about 50 countries. So I sit on the board of the organization. And once again, this is through blockchain and tokenization concept, and I would love to share more with you over a period of time. Please.
Hi everyone, my name is Anuradha Chaudhary. I am a filmmaker turned tech lawyer and founder of 0 to 3 Collective, We're a legal and advisory firm for Web3, for emerging technologies, and for media and entertainment. So we essentially help these businesses on all legal fronts, and we have a collective of advisors, which we will announce shortly, maybe in a couple of weeks, that also help our clients with different things like marketing, cybersecurity, tokenomics, white paper, etc. Thank you.
Hi everyone, my name is Parv. I'm the co-founder and CEO of Estate Protocol. We're tokenizing real estate from a global perspective. So we're trying to acquire real estate in stable countries like UAE, parts of US, and we're going to market with people in monetarily unstable countries, places with really high inflation like Argentina or Turkey. We are aiming to give them an option to exit their system if they feel like people managing that financial system haven't done well enough. We want to give them an easy option to exit that system and enter a stable country system. And for my background, I'm what they call a crypto native, which means I've had a crypto wallet since before I had a bank account. And yeah, thank you.
Hi everyone, I'm Akshay Aggarwal. I'm a venture partner at Draper Dragon Fund. At the panel, I represent more so the investment side of things. But in life, I've kind of gone from a single solopreneur to a product enthusiast, focusing on the product direction in the live streaming space. Then moved on as the product grew to handling the business side. And now I think with all of that falling into the right place, I've gotten the opportunity to wear the hat of a VC. Essentially, in the Web3 space, I have spent most of my time, probably the last 7 years. Once I was back from the Valley, I was focusing on enabling first. So I've worked with about 400 startups, handholded about 40 of them, invested in close to half a century of startups. So I think for me, everything's about Web3 digital assets. And today I'm going to be representing the enabling side on the panel.
Thank you. Thank you, everyone. So I think, starting the next part of the session, so as I said, I am representing content IP tokenization. So just to give you a perspective, content IP globally is more than a $250 billion market, I think even more. Even in India itself, it's almost a 12,000 crore market, right? But again, content IP is a market which is only restricted to few players, right? I mean, we as common people can only be an audience to content. We have never got an opportunity to be able to directly invest and participate in a content. And I think that is what tokenization can do. And that is what we are achieving at. So I think in the same vein, tokenization is bringing a lot of innovation in any asset class that it is working in. And that is what we're going to explore a little bit more. So Surya, coming on to you, I think you are working on a very interesting space of tokenization of real estate, I think, which is one of the most significant asset class invested every year into trillions, right? But my one question is that while we already have heard about fractionalization of real estate, what is the difference between fractionalization and tokenization? Is tokenization just a simple layer on that, or will it be able to make even more impact?
Yeah, great question. So even before answering the difference between fractional real estate versus tokenization, there is one more question. What is the difference between the REITs and the fractional real estate, right? So why do we need even fractional real estate or even tokenization? So the question lies in here. We've seen that change is happening on the web as part of Web3. So the major difference on the real business side, from the realtor point of view and from an end investor point of view who wants to invest in a piece of asset, so is that the lack of trust and the transparency. So is traditional fractional real estate companies solve that question? Again, a question mark, right? And how do we solve that, right? When I'll just give you an example. When Singapore has more than 46 plus REITs, public REITs, India still have 3 public REITs. So which means we can see that from last 1 decade, why that adoption was not, I'm not talking about Web3, I'm not talking about tokenization. Why that adoption was not done yet in the stock market is that, again, investors, perception, investors' ambiguity on their, ROI, on their trust, right? Investing in that trust, right? That's what meant to be REITs. So again, we've seen that, the slowness of adoption, and we again started seeing that the same slowness of adoption in fractional real estate also. Again, the question comes, is trust really required? I mean, when we're in the age of trustless layer, which we call it as blockchain or DLT or multiple names are there, but in 2008, which we've known that when Satoshi Nakamoto actually implemented Bitcoin, the reason behind, I mean, everyone knows who did it, but why he did it, the biggest question. So for me, when I went through the white paper, the one of major reason behind it is that he's seen a huge housing crisis. And that's where he connected the dots, and he thought of, okay, let's have a distributed ledger, and then currency, digital currency and all that. So which means, again, the dot is going back and trying to bring that after 10 years of journey. So for me, solving a trust and transparency, most important thing, which can be possible through open source solution, which is literally available for free. We don't need to even spend a penny for doing that, right? We do have a L1 layers, L2 layers who's doing that from long time. The other one which you mentioned, REITs already solved affordability, and people can access real estate much faster, which is accessibility issue. And trust and transparency also, they solved it, but again, still central controlled. So existing companies were not solved yet. That's where blockchain-based tokenization actually come in picture, because we waited for that. The existing platforms may solve, but eventually it end up with central control. And we, as a decentralized, believers, we believe that the data should be on public blockchain, or at least permission blockchain when we tokenize or when we fractionalize any sort of asset, right? I'm not just talking about real estate, but real estate is the best example, because you go to a village and talk to a villager, he can easily explain what is real estate. But you go and talk about the same villager about Web3 and blockchain, he don't understand that. So I think that requires a lot of mass adoption, but it just enables the interest of how to convey that to the larger audience, especially the retail investors, which we believe that we may be able to do that through solving the biggest problem of trust and transparency. Yeah.
Interesting. So you're basically saying that with tokenization, the benefits of blockchain, which kind of makes the ownership much more immutable and liquid, will be better layer than just a fractional model, something on those lines. So since you're building this platform, and you must be speaking with a lot of developers and builders, right? What is the feedback from them? I mean, how are they looking at this next spate of tokenization of real estate?
No, I don't think they care about technology. I mean, they really doesn't know. When I interacted a lot of builders and realtors from Delhi to Mumbai and Pune, multiple cities, including Bangalore and Hyderabad, but builders' point of view is like they want to sell their liquidity, sell their inventory much faster.
Right.
So they really don't bother about what technology you're bringing into the table. Right. They only care about how this technology can enable them to sell faster, but at the same time to maintain or to keep their brand sustainable. And now we've seen that the adoption of RERA in every state, and Maharara is so aggressive now, but yeah. So when RERA initiated it, obviously builders doesn't like it, but now they have to adopt it. And now they are liking RERA much better than anyone else, because they've seen the adoption of, compliances, adoption of, reporting to the end investor or end customers of their, asset. So I think in that aspect, when RERA sorted out that, why don't we provide the value to the builder. And at the end of the day, what happens to the builder point of view, when I sit in front of builder, he only asks what value you are bringing into the table, to me. So my only proposal is that, I'm not talking about any technology here. I'll only bring you in a sustainable group of investors through tokenized real estate, the product that we built it, or there are players who's building it. Then make the faster sales and provide better liquidity and create a strong investor base to the sale process, which we've seen a couple of builders recently also sold their inventory much faster than even fractional companies. So yeah, I think they only look into the aspect of how to liquidate their assets. I think if we figure out by solving, again, as I said, the liquidity, accessibility, and investors protection at the end of the day, they also care. I mean, sometimes I've heard that, builders doesn't care about investors protection. Sorry, they really care about investors protection, but they really don't have a framework except the RERA, right? I think we collectively believe that we are creating a framework of compliances, the legal, and the data. When we consider all of these three and push that on a ledger book in a general word, if we say blockchain again, people confuse us. So I think that can be audited real time, right? So again, when we say audit, SEBI can come and audit, the auditor can come and audit. Even tomorrow, investor can come and audit real time. When the data is audited real time, when it comes to transactions and the information about asset in a longer run, that's the unique selling point that we can sell that to realtors. Yeah.
Got it. Interesting. So, Parv, coming on to you, since you're also working on a tokenization platform and currently focused again on real estate, right? But what you're doing differently is you are kind of trying to make it a global accessible asset now, right? So, if you can just explain to me that, what are the kind of legal implications, or how are you able to do that? Because you're saying that if I am sitting in India, or if someone is sitting in Africa and they can maybe start investing in Indian markets, right? So how are you able to legally structure this kind of a model?
So getting the legal structure right has been a challenge, but what you have to look at and focus on with the legal structure is optimization for taxes, for securities laws, in real estate specifically about foreign ownership. So the reason why we can't have Indian properties is because there's restrictions on foreign ownership for real estate in India. But we can have properties in places that want to attract foreign investment, like the UAE. And I think the biggest challenge in getting this to market and making it an actual $5 trillion industry is getting liquidity for these tokens. And every other decision I make in terms of what way to go for estate protocol is based on how to get the most amount of liquidity possible. And part of that is getting the legal structure right, making sure that people have the right protections. So to give people an idea, one side of the legal structure is the entity that issues these tokens, and the other side is an SPV, a legal wrapper. Since you can't put 1,000 people's name on a property deed, you have to wrap it legally in an SPV. So you have to decide where that SPV is going to be. For us, the decision is UK and using trusts. And the reason for that is a lot of countries have adopted English common law. So it comes naturally to people in like over 100 countries, I think. So understanding the trust structure under English common law will have a lower friction curve for most people. And then you have to optimize for taxation. Like, I'm not sure exactly how people are structuring it in India, but if we were to let people buy properties with, for example, USDT or Bitcoin, you would have a 1% TDS, then you would have a 30% tax on the profits. That is not ideal, in my opinion. So my idea is that we will go to the places that want this, and we will go to the people that find the most value out of this, and create that global connection first, and then expand from there. I'm sure as we go on, more and more countries will realize the value of this and adapt their laws accordingly.
So, Parv, also, while you spoke about there is still a kind of a legal gray area. Because I would not say gray area, but you have to be very specific, because every country, every jurisdiction would have to have their own legal implication and perspective on tokenization. But leaving that for the moment, and also leaving the technology for the moment, what, according to you, is tokenization doing to these assets transaction? Do you think, because assets have been sold and transacted since we all know, right? But do you think the process of tokenization is making it more transparent, more liquid? What were the main factors, since you come from as you said, you come from a Zen G, consumer specific category. So according to you, what are the factors that tokenization are kind of aiding or adding to the whole layer of this asset transaction?
So as Surya talked about, trust is a big one.
Yeah.
Transparency is a big one. I think those are obvious for everyone. The parts which I think are less obvious is we sitting in a place like India, which is pretty stable in terms of our economy. We don't realize how much value someone would find from having an easy exit to a financial system. Somebody that lives in a country with 100% yearly inflation, which is many countries now, especially in the last couple of years. So think about it, like every month the money you have in your bank account loses 10% value. It's basically impossible to predict accurately how your investments are going to do. Real estate, all other investments in the economy are super unstable. What that ends up doing is people either stop saving money at all. Like if you go to Buenos Aires in Argentina, place is going through 109% inflation a year, but the fancy restaurants are packed. And the reason is people want to spend their money as soon as they get it. Like they have no way to save it. So for a group of people like that, I think the value they derive out of it is stability and a source of stable yield and hope for a future.
Got it. So I think what you're saying is with tokenization, there would be a more kind of a global uniformity and stability, which a person from each country can actually experience, because now the whole world of opportunities could open up for him in a more trustless structure that Surya said.
Yes, and I also think that if people have an easy way to enter and exit financial systems, the people making these policies in those regions would be incentivized to do the best they can for their people.
Right.
To make sure that their own population at least sticks to that system.
Absolutely. So, Anuradha, coming to you, and since you are one of the major pivot, on the entire tokenization piece, which is the legal and regulatory perspective of it, right? So, and since you have been doing work in this space, so what are your thoughts on it? Where are we exactly on this tokenization of assets, specifically with respect to India? Right? And if you want, you can even maybe give some examples from one or two asset categories to make it simpler, because I understand that every asset category will have its own set of implied regulations.
So the thing is, with asset tokenization, it's been evolving for quite a while, right? We started with tokenizing digital assets like cryptocurrencies. And now with the world realizing the potential of tokenization of real world assets, the liquidity that it brings, and access to previously very difficult assets to access, it has been good so far. But the thing is that with an evolving landscape such as this, there are a lot of legal challenges and concerns as well, like investor protection, fraud, compliance with regulations. And in India specifically, there are regulations that apply, like SEBI regulations, if your token is classified as a security. There are implications under money laundering laws in India as well. The Money Laundering Act became applicable to transfers of virtual digital assets earlier this year. And this is actually in line with the FATF guidelines. That's a Financial Action Task Force, which is a global watchdog of sorts for money laundering and terrorist financing. And we've actually been advising our clients for a while to comply anyway as best practice, but these the laws became applicable to the industry earlier this year. We also have advertising guidelines, we have tax laws as well, we have the Contracts Act. And with specific asset classes, like if you're looking at real estate, there are a lot of legal challenges, right? Because real estate in India is, it's a state-wise subject. Transfer of property is a state subject. So you have to, if you have a transaction that creates a right, a title, or interest in an immovable property that's above a specific value, it has to be registered. You have to pay stamp duty on it. But that becomes very difficult with tokenization. And like Parv said, the common legal structures that are being followed is that an LLP is created or another entity is created, and that entity holds the asset. And then as investors, you buy into shares of that entity. But the minute the shares are linked to the token is classified as a security, and then you have to comply with SEBI guidelines and regulations, and that becomes challenging and expensive, right? So that is definitely an issue. In terms of content IP and content tokenization, it's definitely gaining traction as well. I mean, you're doing this, Satish. And there are, again, legal challenges with this. I know it's not sounding very positive right now, but we are getting there as a jurisdiction. So there are legal challenges with ownership of intellectual property. Now, when I was in film school, we used to crowdfund our film projects, and I should probably apologize to everyone who did fund our film projects because they were not that good at the time. But at that time, if I knew that I could tokenize the intellectual property rights in my future project and sell those tokens to fund my project, that would have been extremely fascinating for me at that point in time. But when you are tokenizing content or content rights as the content creator or as the token issuing entity, you need to be very careful about what rights are attached to these tokens, right? If I'm tokenizing the rights to my film and I want to sell these tokens and fund my production per se, do I want to attach, rights such as derivative rights to this? Do I want to give you the right to adapt my film and make a play on it? Perhaps not. And you as the token investor and the token holder need to understand what rights you're getting as well. Because if you don't understand that and you suddenly go and adapt my film and write a book on it, you're infringing my intellectual property and I will take legal action against you. So there are complications when it comes to tokenization. I don't want to bore the audience too much. Personally, I think for me, tokenization would be really beneficial if I could, probably fractionally own a Ferrari through tokenization. And it's not very common, but this is happening across the world. You can tokenize ownership in a Ferrari, and I would be very interested in that. But then if you look at it, I don't know how many other people here would be interested in something like that, but perhaps if 4 or 5 people were, and say you tokenize a Ferrari and you do it on a timeshare basis where, I get access to it 1 week every month, and someone else gets access 3 days, and another person gets access for 2 weeks. What happens if I crash that Ferrari while I'm driving it? Who's going to be responsible? Is it all of us collectively? Is it the driver? In India, the laws with respect to this, they say that if you are the owner of the vehicle, in most cases you would be liable. Obviously, if the driver's driving it without your permission and authorization, or if the driver's negligent, then the driver's responsible. But it does bring up issues like that.
Sure.
So yeah.
I think 2 good things. One, obviously, what I would say is that, normally, compliance always follow innovation, right? And that is how the market grows. So I think hopefully compliance will catch up with the innovation which is happening in tokenization. And second interesting thing that you brought out about this Ferrari is that I think tokenization will also open up a lot of, I would say, private assets. I think there's already the example of someone in India who's doing a similar thing for expensive bikes. So they are trying to create a platform for tokenization of expensive bikes. So there will be a lot of it. There's a tokenization of aviation. There's a tokenization of wine and whiskey. So there's a lot of things which are interestingly happening in that space. But anyway, coming back to you, Anuradha, one more question I want to ask that. While you have told things from a perspective of someone who's offering the solution, if I look at the other way around, let's say if any one of those guys are buying a token, right, and they become the token holder, what are the kind of precautions or rights that they should be aware of as a token holder?
Right. So there is a lot of fraud in the space. There are phishing scams as well. And as a token holder, there's a number of things that you need to be mindful of. Firstly, the token issuer should disclose certain things to you, and you should be asking them about the nature of the token, the rights that are attached to the token. You should be careful about what platform you're using. You should be careful about what rights are attached to the token. Like I said, you cannot just go and start infringing someone's rights just because you don't understand. There are obviously other considerations as well, but I think the most important one, according to me, is the transfer of ownership of rights from an investor point of view. Now, in Switzerland, we have the Swiss Crypto Valley, which came about, I think, in 2015. And this is largely because a lot of blockchain and fintech startups went and set up in Zug. I'm not sure if I'm pronouncing that correctly. But they set up there. And interestingly, Switzerland didn't have blockchain-specific regulation. What they did was they adapted existing regulations and ordinances. And that's how the industry started moving forward. In 2021, the Distributed Ledger Technology Act came about in Switzerland. And this act, it basically records the ownership of real assets like real estate and intellectual property on the blockchain. It records the transfer, and it also records tokenization of rights. So technically, under the DLT, if the blockchain malfunctions in any manner, or there is an issue with it, or there is a hacking issue, the investor's rights in the tokenized rights remains intact.
Got it.
And that is very important for investor protection. So if we have laws like that, if we are following what Switzerland is doing, I think we'd be in a good place right now.
Good. Interesting. Coming to you, Akshay, right? And I think since you are kind of representing from a fund perspective, right? And since you mentioned that you have seen the evolution of Web3 over the last 2-3 years, which means that you would have also seen the rise and fall of so many ICOs, right? So there was a time when ICO craze happened and people were buying any kind of token or coin or whatever you say it, right? But asset-backed tokens are something very different, right? And they are not just spaced out of thin air, as most of the earlier tokens were. So in that perspective, how do you see this movement now happening? I mean, as compared to, let's say, I buying a Dogecoin, and that Dogecoin, depending on how Elon Musk is waking up today, a token, asset-backed token is very different, right? So how do you think this movement is going forward, and do you think this will be able to catch attention of investors like you?
Very good question. I think, Satish, you definitely show the experience that you've had in the crowdfunding space, in the traditional internet, and now the emerging new form of internet, as we call it. But I think before I answer the question, I would like to, for those who don't understand ICOs or initial coin offerings, this was, this huge popular way in 2016-17, where we saw founders going ahead and offering a piece of their company or a utility that their company could provide through tokens itself, right? So this was a huge craze, because from it there was something called as Ethereum was born. $18 million raised from people all across the globe, that now today is about at $230 billion, right? That's a 10,000x. If I had one of those in my portfolio, I would, for my LPs at the fund, I would be, next to God. So I feel there have been, like with every new innovation, there have been things with ICOs as well that showed flaws, right? In fact, it would be right to say that it was a loophole in itself instead of showcasing loopholes, right? So with time, like every other innovation, I feel this is going to improve. And I feel you're seeing nuances of ICOs across. ICOs changed to what they called as initial exchange offerings, wherein, there were these exchanges that were the place to trade listed tokens. Now they started listing new companies that were promising, that were coming in this space. But the key aspect to it was everything was utility driven. There was no underlying asset, which Satish pointed out. So when you move to asset backed tokens, you have an intrinsic value that's underneath it. Now what that also says is that it's not going to be as exciting. It's not. I come from a place wherein I was building a messaging app, a live streaming app, all social experiments. Now when I look at that as opposed to finance as an industry that I've now come, I feel it's very boring. It's kind of the same difference between ICOs, wherein you don't have any asset, but the upside is humongous, right? So there's a lot of speculation, but there's drama 24/7. You're going to be looking at, as Satish mentioned, Elon Musk woke up, changed the Twitter's logo to Dogecoin's logo. So I think that becomes an exciting piece of the life. And I want to, and I believe Parv will concur, that we want a more exciting life than, looking at 100 things that we're not supposed to do, right? Let's allow markets to decide what they want to do. I, again, feel like a country with such a huge population cannot have everybody doing whatever, but there has to be some sort of, I feel you should feel less restricted as parts of the market. And I feel that's what crypto allowed, right? So for example, I was speaking to a founder from the green energy space. What he said was that compliance was the core reason why I moved to crypto. Right. So I think from a larger standpoint, you're looking at new invention needing its own space to go ahead. Now, when you look at asset-backed tokens specifically, it is less speculative. It has an underlying asset. It would not appreciate to the tunes that Ether as a currency appreciated. Now, with respect to what it means for the future is people that are used to understanding things for a particular variation, a particular, volatility would find it very convenient for it to adapt it, right? But now then again, you have, like every other thing that's happened in the crowdfunding mechanism, not on blockchain and including on blockchain, you're going to be susceptible to regulatory clarity that needs to come, right? And what I've realized is in this specific case of tokenization of anything or utility-based tokens through ICOs, I think the reason why it failed was not because, there were certain products that did not have the idea of viability built into the product. There were not enough, products that looked at, a strong business model. But these are all experiments. We're looking at entrepreneurs that are trying to give value. In the case of security tokens or tokens that have an underlying asset into it, what you're looking at is these entrepreneurs making sure that liquidity issuance is not a challenge. You are issuing assets, but the core piece that is a problem is essentially liquidity. Today, if I go out selling a 10 crore property, I'll take from anywhere from 6 months to 2 years to sell that property. Now we're used to a Gen Z kind of a platform wherein people are quick with their decisions. So now if they want to purchase a property that's 1.5 million out of the 100 million they made in the ICO craze, they can buy it not just in India, across 10 locations in 6 months, right? I was talking to Parv, he was mentioning, there's going to be potentially in the future a villa in Goa that he's going to tokenize and sell to investors. So I think that's where I feel regulatory clarity needs to be solved. There are some gaps on the side of, things like who's to custody these assets, right? If you're looking at a digital twin, there has to be someone holding the physical asset. Now you have to trust that digital asset. That's a problem that was not there before. So for it to take off, you need to have a bunch of organizations. And this is something that happened with WBTC, wrapped Bitcoins, which, there were enterprises that were doing it. And at first there was only one enterprise that was custodying the asset. And so the decentralized community did not trust that. They wanted more organizations to come up. Now there are 5 different custodians attached. So I feel the custody aspect is going to be coming in. I feel anywhere where there's a real asset attached, you do not have the idea of built-in scalability into it, right? You have to have a continuous mechanism of custodians coming in with every asset that gets listed, and then you're looking at that being sold through its digital twins, and the value coming in with secondary market transactions. So broadly, I feel 2 categories. One is market acceptance linked regulatory clarity. And then on the other side is you're seeing a world that's opening up now. You're looking at a tokenized market of, let's say, about $3 billion at the moment. But how do you go from this to trillions of dollars, which is where the asset industry is? So I think with time, we're going to find the answers to this. The only way to predict if it's going to be as stable or not is to build it. And I feel the world is vibrant with Surya and Parv and such entrepreneurs. So one bold statement I still want to make is that, in terms of accessibility, in terms of secondary market trading, in terms of 24/7 liquidity, I think this is going to be as impactful as the stock market itself was.
Sure.
You're looking at $120 trillion of value in stock markets across the globe. I feel if not, 100%, 20% of it, that's where this is going.
That's an awesome point, Akshay. Thanks so much. Coming to you, Ish, from a demand perspective, since you are in the domain of wealth management, right, and you're dealing with HNIs and investors day in and day out, right? So from that perspective, what is your feel of the market? How are those guys who would be potential investors in these tokens? They are looking at it. Are they excited? Are they threatened? Because in a way, tokenization is also going to democratize asset funding to a very large extent, right? So, like if I give an example of content IP, wherein only, let's say, 10 or 15 people were so far had access to that asset, but now with tokenization, something which Akshay also mentioned, the accessibility opens up to a very large extent, right? So, in given those kind of parameters, where do you think, from a demand side, this is going to go?
Thanks, Satish. So, three aspects I'll broadly cover. Safety, security, scalability, and, broadly, it should be accessible.
Right.
So, from a safety and security perspective, I think there's enough technology available today for us to be able to build that entire access into the system and trace assets. So, if Parv or Surya or whoever else is there within the system is building an organization that is able to trace the safety and security of the asset or the legal basis of what you're trying to tokenize, I think you've got a proposition. Many times in economies like India and in many other economies around the world, that's a bit of a challenge. How do you crack that challenge? I think that's something that the legal minds as well as the operational people on the ground, they need to try and crack. It's happening, but I think no matter how much technology you look at, it's not infallible. Yeah. Technology can also go wrong at times. It could be human, it could actually be technical. So that's one issue that needs to be tackled. However, is there general acceptability? Of course there is. So that's one piece that I think the industry is addressing. Governments need to make sure that investor protection, governments need to make sure that the buyers or even the sellers are protected. So it's a two-way street. Otherwise, you will have absolute chaos within the legal system, within the financial system. And when we talk about scams, when we talk about various other things, this has the potential of blowing up in somebody's face and becoming even larger than what you've seen banking scams and other scams that are taking place. So I think that's one part of it. The second part of it is scalability. Now, in today's day and age, I think there's no limitation to what can be tokenized or what can be put on the blockchain. You look at real estate, which obviously seems to be the big aspect, which everybody talks about. You can look at things like, art, you could look at whiskey, you could look at Ferrari, like Anuradha mentioned, you could look at airlines, you could look at tickets, NFTs, you name it. There's nothing that can't be tokenized. It could be a digital asset, it could be a real world asset. However, do keep in mind, what is a sustainable business model? Okay? We can be idealistic and we can say we want to tokenize this, or we want to put this on the blockchain or that on the blockchain, but a lot of that are just lifestyle issues. But what is the real scalable proposition? What is financially a more viable proposition? Let's take India as an example. Yeah. I think I was just talking to somebody in the morning, and one of the things that came out very, very clearly was, in the Indian context, which is where all of us are, you've got to realize that if you can't reach the masses, then you don't have a proposition. Yeah? The proposition is very tiny if you can't reach the masses. You can't just develop it as a niche product. And what is the government doing these days? The government is saying, okay, we're ready to tokenize, we're ready to go on the blockchain, people are building smart contracts, people are building all sorts of instruments that go into the industry. But where is the real attraction? In the financial services space, how many organizations or companies can make financial inclusion or access to credit and things like that part of your entire operation? That's where the real numbers are, and that's what makes it a very attractive proposition. Today, I think every major bank is looking at tokenization and blockchain. The RBI has come up with a regulation since 2022, which says, each one of you who uses a credit card has now got an option to say whether you want to tokenize your credit card or not. So things are happening, things are beginning to happen. But there are linkages which talk about cryptocurrencies, which talked about Bitcoin. Is it something which a country like ours, 1.4 billion people, can handle that easily? We can talk about Dubai, we can talk about, jurisdictions which are small enough. They have different perspectives, we have different perspectives. Now, as an operation, I'll give you our own example. We as a company are 9 years old. The Global Wealth Group is 9 years old, and we are a 100% tech-enabled platform. We do fractional ownership, we do fractional ownership for real estate, and we do work with alternative assets. Now, with real estate and alternative assets, we've tried to democratize it as much as possible. So, if you are to make it accessible to the masses, you have to be able to democratize it. You can't say in the developing world, I want 50 lakhs or I want $1 million from everybody to actually come into the system. So if you want to build scale, you've got to be able to bring those numbers down to $100, $10, and in some cases even less. How many companies are actually able to do that? It's taken us 9 years to do it. Today we manage $1.5 billion worth of assets. We have investors in 68 countries. Now, that's the scale that one really needs to build. If you're able to build that kind of scale, you have a sustainable business model. Now, the legal issues, the technology issues, the compliance issues, the banking regulations, those all play critical roles. And you can't afford to go wrong. But yes, like Parv mentioned, you have an entity in the UK that makes the investment. You have entities in different parts of the world which handle your wallets, which handle your banking transactions. And you have taxation issues that need to be handled. And at the same time, you need to make sure that that transaction is financially viable. Everybody within the system should make money. You can't just depend on investors to keep giving you money and bankrolling you to run your operations. So there are complexities, but I think patience, time. What's happening with rules and regulations in countries like India? I think investor protection is one of the biggest issues that a country like India needs to really look at. And I think that's what, that's exactly what's happening. I won't go into too much of detail on that, but I think you've got n number of opportunities, startups, SMEs, they all want money. Are there ways and means of doing it? We've got another operation which is based out of France where I sit on the board. And we are in 50 countries. And in these 50 countries, we're raising money through private networks, not through public networks. So opportunities are there. I think we've just got to get it right within the right geography and build scalable businesses. Bottom line is, money will only come into businesses which are financially sustainable.
Sure.
And I think that's something. So I know time's up, so back to you.
Thanks, Ish. I think that was a very interesting perspective. And I think overall, if you look at the whole picture, and as Akshay also said, something which was not sustainable with the ICO model was this exactly, that it was not a sustainable model over a long term. But I think with tokenization, we can bring in that sustainability, we can bring in that scalability. Because a tokenization can enable a larger number of people to invest into a particular asset class. So I think the opportunity is huge. Obviously, we have to still cover some journeys on that to make it happen. So I think, having said that, and we would have loved to discuss it more. There's so much to discuss on tokenization, but we have a limited time. So maybe I can just take one question if anyone has one question, and then we can wrap it up. Any audience? Okay, cool. So I think in the interest of time, we'll wrap this up. Thanks so much. I hope this was useful for all of you. And thanks for the panel to be able to share their perspectives. Thanks. Thank you.